the Spike Long Purse MDI indicator, which is provided by the TradingFinder group. You can access the indicator on the TradingView website from this section. Also, interested traders can read this comprehensive page to learn how the indicator works and how to effectively use it in their trading strategies. To access the indicator on the TradingView website, go to the Indicators section, search for the indicator's name, and after selecting it, apply it to your chart. For quicker and easier access to this indicator, add it to your TradingView indicators by enabling the Add to Favorites option. Once this powerful indicator is successfully enabled, it immediately starts identifying and clearly displaying the highly effective spike two-leg pullback trading strategy directly on the price chart. This particular strategy represents a truly powerful and robust trading approach that is fundamentally based upon two absolutely key and distinct concepts: the initial spike and the subsequent two-leg movement. Experienced price action traders, especially those who are actively using the fast-paced scalping style, can very effectively utilize this comprehensive strategy to precisely identify numerous profitable trading opportunities within short-term timeframes and subsequently enter well-timed buy or sell trades in the dynamic market with greater confidence. Spike candles refer to a specific set of three distinct candles with the exact same directional movement, where the crucial middle candle prominently represents a significant market imbalance and a very sharp, decisive price movement. Here, you can clearly observe the spike candle, which has undeniably made a remarkably strong and powerful upward move, and there is a very noticeable and significant gap that exists between the first and the third candles. This particular gap unequivocally indicates either extremely strong buying pressure or equally strong selling pressure within the dynamic market environment. In this specific example, you can distinctly see this pronounced gap, which is essentially the measurable distance between the initial first candle and the subsequent third candle in the overall market structure. Based on the prominent spike candle, this significant gap is created, and usually experienced traders can readily observe these spike candles after a prolonged range or a noticeable consolidation phase in the market at the precise time when these spike candles are formed. Our entry point is on the third candle of the spike, and only if the next candle manages to break above the level of the third spike candle, the strategy will be executed for us. But in this section, we see that the next candle has made a higher high and a higher low. Our entry level is then moved to the very next candle. Again, in the following subsequent candle, a distinctly higher high and a clearly higher low are formed, so our entry level is consequently moved to the next candle once more. However, in the second candle, we clearly see that at this precise point, it moves significantly downward and effectively activates our entry level in this specific section, which profoundly means we can confidently enter a buy trade in the market at this exact point. This incredibly useful indicator automatically determines the crucial stop loss and the beneficial take profit levels for us. It calculates the stop loss ratio based on our entry point and sets the take profit level at an R of 1 to 1. The stop loss level is also set at the beginning of the movement leg, or the start of the bullish or bearish wave, which you can see here as the start of the wave, after which the price has moved upward. In another section, we can clearly see that an entry point has formed for us right here, where a sharp and significant movement has occurred and the price has moved upward. Our entry level in this section was here, and then it moved to the next candle. Here we see that in this candle, our entry level has been broken, which can be used as an entry point for a trade. At this entry point, we should enter the market, set the stop loss behind the swing or the spike movement leg, and place the take profit at a 1-to-1 risk-reward ratio. However, regarding the stop loss, we see that a 50% level marked in yellow has been identified and displayed for us. If the price enters and reaches this level, we can have another entry into the market and use this point as a new entry for a trade. This gives us a higher risk-reward ratio, and we have 2 entry points at this level, allowing us to profit from the main market movement. If we enter at this point, we get an R bar of 3, and by entering at this particular point, we effectively get an R bar of 1, so in total, we consequently have an R bar of 4 with a calculated risk of 2. This advantageous setup allows us to profitably capitalize on the movement leg. In the settings section, specifically under inputs, there are several important options available for us. In this very first input field, we can precisely specify the minimum number of consecutive candles that are truly required for a spike move, which is conveniently set to 3 by default. This essentially means that to accurately identify a spike move, at least 3 candles are absolutely needed, but we can easily increase or decrease this particular value. The higher this particular value is set, the fewer trading opportunities will ultimately be identified, and the lower it is set, the more trading opportunities will be clearly shown, but this comes with a significantly higher risk. In the very next input, we can either enable or completely disable the spike filter, carefully based on the current trend strength. By deactivating it, more trading opportunities will be clearly and readily displayed for us. However, by activating this particular option, trading opportunities with low momentum will be effectively filtered out. By enabling this specific section, we can precisely set the threshold level of strength here, where higher numerical values consistently filter out weak movements and consequently only show us strong, impactful spikes. In this next important part of our discussion, we can easily enable or completely disable the gap filter functionality. If we meticulously set this particular option to disabled, the gap filter will be entirely turned off for us, effectively ceasing its operation. However, by thoughtfully enabling this very useful option, we are then able to precisely specify different gap identifier statuses within the section directly opposite, which by default is initially set to all gaps. Here, based on the established system strategy, we can carefully choose from a variety of options such as significant gaps, structural gaps, and major gaps, each serving a distinct purpose. In this next part, we can enable or disable the option to allow or disallow the display of doji candles within spikes. By enabling this option, stronger filters are applied for detecting spike movements. If we enable this particular section, we can then specify in the 2 distinct options provided below the maximum allowable ratio of the body to the entire candle for accurately classifying it as a doji. In the very next part of our settings, we can precisely set the maximum percentage of allowed doji candles that are permitted within a specific spike. In the subsequent section, we have the ability to either enable or completely disable the sophisticated detection of trends using these doji candles, and if we choose to activate this important option, you'll clearly see that a much stronger and more refined filter is automatically applied for us so that the overall strategy can be more accurately identified. If we enable this particular option, we can then set, in the detailed section located below, the maximum body-to-candle ratio for precisely classifying a doji in our trend calculations. In the next crucial part, we can specifically determine the exact number of candles that are used to calculate the doji percentage in the comprehensive trend evaluation, and finally, we can definitively determine the maximum allowed percentage of doji candles within the entire range that is currently being reviewed for us going backward in time. And finally, in the last section, we can enable or disable the stop-loss threshold feature. If we set this option to active, we can determine the stop-loss threshold value for risk management. In the next part, we can specify the risk-to-reward ratio, which by default is set to 1. And if we set a higher value, it will make the necessary adjustments for us. In this final section, we can also specify whether the stop-loss threshold should be included in the risk-to-reward calculations, which by default this option is enabled, and if we disable it, the calculations will change accordingly. In the next important section, we can carefully choose exactly how to visually display these crucial numbers, which fundamentally has two distinct modes: the comprehensive setup mode, which is primarily based on a detailed risk-to-reward analysis, or the clear buy and sell signals, both of which are fully and easily adjustable to suit your specific preferences. By default, it is initially set to the convenient setup mode. In the very next available option, by simply enabling this particular feature, only the absolute last tradable position will be prominently displayed to us, and consequently, all the remaining positions will be completely deactivated. In the next section, we can enable or disable the alert notification in case of trading position signals, and finally, we can enable or disable the display of input items in the status line. Well, my dear friends, we've finally reached the very end of this comprehensive indicator tutorial. We would be absolutely delighted if you could kindly share your valuable comments and thoughtful suggestions with us in the comments section below.